work at the Institute of Economic Affairs. And thank you. Welcome to our webinar for today. We promised to start at 3. I think we should just get started. So, as I said, the work of the Institute of Economic Affairs is to provide platforms for Kenyan professionals to discuss topical issues in Kenya's economy and public affairs. And the IE has been here for 25 years, tracking topical issues and trying to facilitate public knowledge around them. So in the last few weeks, one of the things we've been tracking is basically to find out what are people interested in. And among the things that everybody has been interested in was a letter that David D wrote, an open letter to the president on the 25th of March this year. And out of that, of course, has issued a lot of discourse. So we will link to that letter in a while, so that all of us can get a view. I think it's required reading for this discussion. But we have David D, who kindly accepted to speak to us, basically to rehash what his main arguments were during that meeting. I mean, during that in that letter, and to give us an update about what he thinks is happening in Kenya and globally. So David is here. Just like us to enforce 2 rules. 1, while the speaker is on, when David starts to speak, please switch off all your microphones, keep them on mute, and also switch off your cameras. I'll do that as well, so that we can have David make the presentation. And because we are recording this, it's better when we have one face showing, only one face showing. So David will make a presentation, and thereafter we'll have a question and answer session. He'll answer. Some of you already sent us some. David to answer. We have a chat box. We have a chat box as well. You can send some of those questions through the chat box. But when David's presentation is done, I think about 20 minutes or so more, or a little bit more, we'll have the. You can raise your hand. There's a menu box on your screen. You can use that to raise your hand, or you can send your question and then ask David. So David, welcome.
The name itself carries some of the meaning. A lifeline fund. First of all, we understand a lifeline. So lifeline speaks to survival. You know, you throw somebody a lifeline when they're drowning so that they can survive. Yeah. So already that speaks to the fact that it was already evident, or it postulated, that COVID-19 would require us economically to go into survival mode, not in thriving mode or growth mode or stimulus mode, but in survival mode. And I think that's important. And I probably don't have to explain that now. I think it wasn't apparent to many people then, because many people wanted to be more optimistic, I think, than was warranted. But here we are. Secondly, fund. Fund in our public finance system has a very specific meaning. We have 2 ways of spending government money. One of them is through the budget. And once you put the money through the budget in the government budget line, it is then subject to procurement processes, IFMIS, you name it. There's a pipe there that has all manner of implications, and it's actually government spending money. So it is that money is put there specifically for public service delivery or for development projects. Fund, on the other hand, we use for money which is dedicated to non-government sort of expenditure. So this is direct disbursements. You put money in a fund, like the fund or women fund or CDF, and that money is disbursed directly to beneficiaries who may be citizens or businesses. The budget does not disburse money directly to households or businesses. It is spent by the government on its programs. So, and that again is a major distinction between the programs that we are seeing, which are going through the budget, and my contention at the time now that this money is, now then let me back up now as to why that is important. The normal Welia put this very well. He said that the normal demand management tools are not fit for purpose. What do we mean by that? When you have a normal recession like the 2007 crisis, businesses are intact, but what is disrupted is demand for all manner of reasons. So if you want to go to a restaurant, the restaurant is open. If you want to fly, the airlines are flying. But it is for various reasons. If you want to, people do not want to do that. Yeah. So that is what depresses demand. And therefore, the policy instruments that governments try and do is to stimulate demand. Now, COVID-19 shock is not just a demand shock, it's a demand and supply shock. Because if you want to fly, you cannot. If you want to go to a restaurant, you cannot. Yeah. So, because what it is disrupting is the preventive measures that we need to take so that we don't fall sick are the ones which disrupt the economy. So the more you, so it has created a trade-off between your sort of health risk and economic activity. And normal recessions, even the Great Depression, they don't do that. A trade-off between health risk and economic activity at the aggregate level is a very rare thing, and it's only been associated with epidemics. Now, that being the case, then stimulating the economy through the traditional things wouldn't work. So the policy problematic was what kind of policy instrument would be able to mitigate the effects of COVID-19. And that is what I made very clear, that, and it then became actually it picked up quite a bit. And many economics, I think we've gravitated to exactly the same view, that what you need to do is to combine the traditional stimulus with social protection, so that you take money that you would use for a stimulus and use it for social protection. And it's increasingly being referred to as income replacement. Because when you say you are replacing income, you're saying, for example, that the Norfolk has closed and it has laid off people. Now, all the businesses that supply the Norfolk will take a big hit. And of course, all the employees will take a big hit. And that will then have a multiplier effect in the economy. So you can't reopen the Norfolk for now, because at any rate it's closed because people are not going to the hotels. What you can do is to mitigate by replacing the incomes of those people and seeing whether you can give businesses some support, the businesses which you are supporting Norfolk, so that they don't close and also lay off their people. Because then that's the multiplier effect that you are avoiding. That's why I say that's a survival mode. So you need to find out, how do you ensure that you don't lose all the aggregate demand and aggregate supply that the Norfolk is going to leave. You're going to lose some of it, and a significant amount. But if you do nothing, your economy will go into a tailspin much more dramatically than it would. You will not stop economies from contracting. But the most you can do is, in survival mode, is to try and preserve as many businesses. And of course, first of all, people need to eat. Yeah. Now, in the West, they have already social protection systems. So that I remember reading, once the Canadian government decided that it was going to give people income replacement based on all sort of their wage and the businesses, and once that criteria was decided, the Canadian government literally has a payroll for the citizens. So people found money in their accounts the following day. And some of them were wondering, who put money in my account? So if you have found some strange money in your account, don't worry, it's from the government. Now, we do not have that infrastructure where the government has a payroll for citizens, because we do not have as elaborate a state welfare system. The only thing we have is something they're trying to do for old people and vulnerable groups, where they can do direct cash disbursements. Hence my point that what system do we have if you create a fund that would then be able to disburse money directly to people? And that's why I proposed that the only system that we have, because you're replacing the incomes and you're supporting businesses that already exist, those people actually have banks. They are banked. Therefore, the system which can actually disburse money and actually give you an audit trail is the banking system. Yeah, so that's another feature of my Lifeline Fund proposal, which differs from what some of the proposals the proposal the government is doing. The other sort of, I think, distinct feature is that if you look at many other countries, what they are doing is mostly, particularly for households, is grants. But as I said, they already have budgets for this sort of thing, because what they're doing, they're really just enhancing unemployment insurance. Because people went and claim their unemployment insurance, and then the unemployment insurance funds run out. So governments are actually replenishing those funds from the budget. And they are, of course, doing various things for small businesses. And again, my point was, once you decide that you're going to do that, then you have the challenge of resource allocation. How much resources do you have? Who should resources go to? How do you target? Social protection can be very complicated. I said, now, if you decide to give grants, you're going to free money, you're going to run into all manner of those issues. But in economics, we know if you want to ration something, the best way to ration something is to charge for it. And then there is a self-selection effect. Only people who really need it are likely to people who sort of, it doesn't become a sort of a free, if you give a freebie, everybody will say they are entitled. If you say that there's a charge, then not everybody will, only people who self-select. We call it the revelation principle, those who don't get theory. So the other proposal was that this money should sit in banks, and then businesses which are affected can then go to their bank, and what you establish is a criteria. You can say, if you're looking at support, at a basic support for people who are losing jobs, you are then looking at what would be a minimum survival budget be for that individual. Because obviously, if somebody earns 30,000, 40,000, they don't spend all of it on food and rent. They have some discretionary income, and they say, okay, if you arrive at some figure, I haven't done that analysis, you would say, for argument's sake, that every business can borrow 20,000 shillings a month per employee per month for a certain duration. So the money isn't disbursed right away, but it's saying if you have 20 employees and you have sort of either you're closing because you are running a barber shop or some salon, which is a high contact business, and you actually have to shut it down, you can borrow up to 50% of the salaries of your employees, and maybe your rent, and whatever it is that needs, and your own needs to keep this business alive per month for, if we say 6 months or 8 months, or whatever period that COVID-19 is going to last, the shock. And then after that, you can say that this is a very soft loan, maybe very low interest, maybe zero interest, with a very long grace period and a very long repayment term. Because again, you don't want it to be a huge burden on businesses when they do get to reopen. So they should actually be able to pay that in a very modest sort of manner. So the fact that it is debt is actually a rationing device. Now, the other point I want to make is that it is not, that is the difference between some of the proposals that are being made about giving small businesses guarantees. Now, this is not a business loan. Now, when businesses go to the bank, that is based on appraisal, on the prospects of the business. Now, this is no time to appraise business prospects. Secondly, you do not want this lifeline fund sitting on the balance sheet of banks. Yeah, you don't want this sitting on the balance sheet of banks. This is a public policy instrument. Yeah. So what you are saying is banks are just your disbursement agent. What happens is that you have set the criteria and you have told your banks that you can lend your customers government money as long as they're your customers, and you know their businesses are bona fide. You see their accounts all the time because they pay through. You pay through them. So the purpose of the bank is really just screening. You can you can disburse to these people government money to the tune of so much based on the following criteria, and you are also responsible for collecting that money when the time comes. Now, that is already we already have existing platforms because banks do have donor and government credit lines that they disburse. So you are not actually doing anything particularly novel. You are actually using infrastructure that we have. But I do want to emphasize that you're using that infrastructure because we do not have a universal social protection system. Ideally, if you are a Western welfare state, that would be the infrastructure to use. We do not have it, so the next best thing to my mind, for purposes of this specific policy instrument, is the banking system. The final clarification I want to make is that it is not an exhaustive and universal safety net. It is not for Mama Mboga. Because the question that has come up is how does this help Mama Mboga? Mama Mboga doesn't work at the Norfolk. So she's not been laid off. And she doesn't supply the Norfolk. So if you replace the incomes of the people who have been laid off at the Norfolk, and they continue to eat because they will continue to buy vegetables, then in principle, Mama Mboga should continue to survive. Mama Mboga is not disrupted. It's not as disrupted as KQ pilots and crew. So there has been a tendency of people to look at this from sort of a very knee-jerk distributionist perspective. And that is, I think, one of the misunderstandings where they miss the fact that I am talking about a policy instrument which is in lieu of traditional fiscal and monetary stimulus. It is not of itself a welfareist instrument, even though it has that character. Finally, because it is not exhaustive, if you read my open letter to the president, it says because this is not exhaustive, you still do need a social safety net for people outside the business sector who are not employed. And again, may I emphasize that this is not just for formal businesses. It should be accessed by even small and micro enterprises. But the point is, there are still people out there who are outside that system. And for that, I said, I would propose that you also have a community-based system. And again, we have used those sort of instruments before for other things. We use them for bursaries, for instance. Yeah, CDF, bursaries, those sort of things. So the thing with the community instrument system, in the same way we are leveraging on banks because we don't have a welfare system. You are leveraging on social capital because the communities are likely to know who are the vulnerable among them more than government can. So, and you are leveraging on existing sort of social infrastructure precisely because you do not have a state welfare system to do that. So those are the critical distinctions of what distinguish what I mean by this lifeline proposal with the things that are being done, because the things which are being done are the normal things we do. Now, so, and I have tried to understand what policy analysis of the COVID-19 shock informs the government giving tax incentives. How does a tax incentive translate to a mitigation of a COVID-19 shock? Because right now, you can't give the Norfolk a tax incentive. Yeah, you cannot give businesses, even you cannot give those employees a pay break because they have no salaries. Okay, so I think one of the big gaps that we are having, and I'm quite disappointed because I know a lot of the people in government have the capability to do this, is that we are not seeing policy analysis which links cause, effect, and intervention. This is the cause of the thing we are responding to. This is the effect. This is our intervention. And this is how that intervention mitigates the effects of that phenomena that we are intervening. So that I want to stop there because I think that those are really the key essentials. Perhaps a final point was in terms of financing it and the magnitude. Now, my on financing was responding to the fact that we already have a very big budget deficit. So we don't have much headroom to borrow. Ideally, if you look at Canada, Canada had a deficit of 1% of GDP before COVID. So they've been able to ramp that up to 7 or 8% of GDP. But if you're already running 7% of GDP, our headroom, you don't have the headroom to ramp that up to 15. That's completely, I think, it can be done, but I think now you are bordering on taking some other huge risks if you don't. So my final proposal was about financing it. I said, look, given that we don't have the fiscal headroom to increase the deficit, the most prudent way of financing this is by expenditure switching, so that you suspend some things which you may not even be able to do at any rate because of the COVID-19 disruption, particularly development projects. And then you switch the borrowing that the government was already going to do, because the government already budgeted a 6% of GDP, already budgeted a 6% of GDP deficit. And my own estimate is, look, we should be able to switch 2% of that deficit, which we've already, by combining various things, we should be able to switch 2 percentage points of GDP of that deficit to this COVID-19 relief. So one of the things I find very intriguing is when I see government trying to raise money from private sector and all manner of donations. So given the scale of what we are dealing with, this is not something you are going to do with by passing a hat around. And I hope that is already evident now. It's a matter of making a decision. How much of the already planned borrowing are we going to switch? And you switch it. And I think something between 100 and 200 billion shillings. If we had done that in March, beginning of April, I think we could probably have mitigated failure of probably a third of the businesses that are going to fail, and made sort of recovery that much easier whenever that will be. So again, that's another difference in terms of financing vis-a-vis the kind of financing approach that I'm seeing being taken by the government. So let me stop there.
Okay. Thank you, David. Thanks a lot, David. I won't summarize in full, but I'll just say 3 points. One of those is that you say that the contraction is inevitable. I think that's true. I mean, whether it's global or back home, I think there's a bit of growth that has been lost that's not going to come back quickly or come back this year. So that's the first one. The second one, I think, is the distinction. Yes, because most people who claim to have an understanding of Keynesian economics tend to think that every recession is the same, and what they're thinking is let's throw money at it. What you're telling us is that this is a completely different kind of, or rather, the nature of this crisis is so different that we actually require an expanded toolbox, and part of that is why a lifeline proposal is necessary. The third point is, I think it's profound, David. You say that that you're surprised that the solutions that the government has proposed, because you claim that the policy analysis that they have and the solutions that they're proposing have not linked the cause, the effect, and the mitigation, which tells me that people rushed to what their preferred mitigation is, as opposed to what exactly is the problem and how they link those, which is I mean, that shows me in more trouble than we thought. And then you conclude with the fact that by virtue of the fact that we're already running a deficit of 7.5%, and I think that you must be given credit for, you started to say, look, whatever it is we might be choosing as our policy goals, we are robbing ourselves of any headroom should we ever suffer shock. And those choices were made about, well, debt is good and everything else. So here we are now. So we have a very small space for anything that we might want to do. I think also that I am most impressed with you saying that, look, if we use a price mechanism for those who want to borrow, and we are using the financial system or the banking system, speed was essential. So obviously sending that money was clear. I was going to ask you how much of the damage you think would have been saved, and you already said that about 1/3 of the businesses that are going to fail, unfortunately, could have been prevented if we had moved earlier by just simply switching expenditure from things we can't spend on and all that. But I don't want to exhaust this for everybody else. I think a couple of questions have come, so I'll use that. But let me hijack the dispensation of moderator first. And before we go into this, I'd like to say two things. One, guys, please switch off your cameras, because we are recording and we'd like to have just David on the set. Please switch off your cameras. Sondungu, please switch off your camera. Now, David, I think three things have happened. Or rather, I think one of the things, one, the government of Kenya is trying to get a stimulus, whatever it is, and they're trying to do it on the cheap by opting to look for money from donations. I think that's one thing that that's clear to me. At least you've reiterated that. The one you have not emphasized a lot, and of course you had little time, is the question of debt forgiveness. In the paper that you wrote, I mean, in the letter that you wrote, you stated that President Kenyatta had an opportunity to actually be a champion for debt forgiveness. And you even calculated that if debt forgiveness would be very advantageous because it's money we already have. So it's basically as if we are able to switch that money. That could have happened as well. And then the final point is you mentioned about delivering the fine thinking that is required for delivering that lifeline. So I guess what this shows is that we have we've tried the stimulus. Yes, we are doing it on the cheap. We have not defined one that's specific for farms. And obviously now it's almost 8 weeks since, actually going into 9 weeks since you wrote your letter. That's bad. We have not got much debt forgiveness, and we are seeming not to be delivering on the lifeline. If you put all these together, before I open up to I think, David, you should tell us, where do you think we are? I mean, because you identify those three things, and we seem not to be doing it. I mean, we are going by half measures, sometimes missing, going for the wrong target, and obviously we haven't gotten substantial debt forgiveness. So where do you think we are? If I open up to everybody as we're lining up the questions.
Kwame, I don't know. But let me clarify a few things. One, debt forgiveness. I raised debt forgiveness first as a response to the call which had been made by Abiy, whereas in the context of African Union for more aid.
Yes.
And I said, look, you guys, negotiating new aid and signing new agreements and loan agreements and stuff is going to take longer. If you could get debt relief, because if there's a commitment to debt relief, you can already know we are not paying this money, we can begin to spend it because it doesn't have a disbursement lag. So that was the first reason. It doesn't have a disbursement lag. The other reason was anticipating that, of course, you are going to get a revenue squeeze, isn't it?
Yes.
So because your revenue is going to fall, and for us, we know we have already been on a downward trend in terms of revenue, and I say if we are going to have a revenue squeeze, and you are trying to do a stimulus to this lifeline fund to respond to COVID or whatever, and you have also to ramp up your public health sort of spending, then clearly you need to start thinking about how do you finance it. So again, it was in the context of a more sort of comprehensive look at the fiscal situation how the fiscal situation is going to happen, because your revenue is going to fall, your expenditure needs to go up. You don't have the time. You already, as I said, have already shot yourself in the foot by not leaving yourself enough fiscal headroom to deal with shocks. So that was what I said, like Africa should really focus more quickly on debt restructuring, because we already knew that we were running into debt distress, and debt and interest on debt was already one of the big squeezes on expenditure. So if you could get some slack on that, it could give you some fiscal headroom. That really was part of it. Now, in terms of our responses, I had a conversation, and I sort of referred to it in an article I wrote subsequently, with some of the things which sort of gave me insight in some of the thinking that was going on in government. And people had all these. There was a very innovative proposals, I agree, to raise money from the private sector. Some of them which have already come to light, and those were not so smart, like a moratorium on bonds held by pension funds. That was one of the things. And I listened to this conversation, I listened to what was going on, and then my sense was that these people, I got a sense that I didn't understand what it is that our government had not appreciated, that which penny had not dropped. Because my first reaction was to look at the following. I had just been looking at the central bank OD of the government. And it was at that point, it was about 20 billion shillings. And I know that the ceiling, which is supposed to be 5% of some revenue, I did my quick back of the envelope, and it came to about 75 or 80 billion. So I said, you have a 40 to 50 shilling billion headroom on the CBK overdraft. You have a civil contingency fund provision, I think, of up to 5% of the budget. You have the emergency of the century, and you are not deploying those mechanisms. You're looking at how you can sort of invent, so even where the government was deploying its managerial time, and energy, and that to me became emblematic of the problem, that there is perhaps not either sufficient, sort of appreciation, or there is a determination to preserve something. Perhaps not preserve, maybe preserve the budget, and try and see, for whatever reason, that people wanted to preserve the budget, perhaps to achieve their political objectives or whatever. But there's clearly something in government that is preventing it responding to this crisis with the resolve and with the scale that you are seeing everywhere else, or most other places, and which is clearly necessary. I think that's the way I would summarize it.
Okay, fine, David. So I'll go now to a couple of questions that have come, and they're written questions, but let's start with the people who have their hands up. There was Dan Kyle, but let me go to the next person. Fanon Kiu, please ask your question just directly and keep it short so that we can have as many questions. Fanon?
Okay, so David D has frequently mentioned Norfolks, and we know some multinationals being popular for money laundering ventures, but they're hiding behind the face of a company. And in such companies, profit making may not be their main objective. Could it be that there are other interests which are threatened, and the lifetime fund will not be of much use to them?
I use Norfolk because it's been in the news now. I think Serena closed 10 hotels more than a month ago. Okay. Kenya aviation is grounded. Global aviation is grounded. I saw something like by the end of this month, they're estimating 900,000 pilots globally will be out of work. So picking just that particular example to graphically illustrate, because that's the one which has been in it. And again, it's whatever you're talking about, it has laid off lots of people. and it has a lot of suppliers. Okay, because it is a real business. It has a lot of suppliers. It has laid off a lot of people. So that will cause a shrink in aggregate demand. That's what we are concerned about. We are not concerned about who a business is. We don't know. I mean, there's if you start going that route, even businesses which you think are very legit, you don't know. Absolutely, you agree with you. It's not clear.
Okay. I think next we'll ask Anita. She's had her hand up for a while. So Anita, can you ask your question to David?
Okay. Thank you, Kwame. Thank you, David. My question to David Lee would be, I know for sure that individuals have been receiving some amount of money, and his proposal is more on SMEs. So my question is, do we still continue with the individuals who are needy, at the same time run the SME program? Two, I hope it's not a lame question, is what would be the motivation for banks to hold this money? And finally, is this lifeline fund sustainable? For example, if maybe COVID is not expected to end in maybe 1 or 2 years, but is this sustainable? Are you looking at it, for example, from like a HIV fund? I know there's some kind of arrangement around that. Thank you.
Thank you. Number one, the Lifeline Fund is not for SMEs. It is, as I said, for businesses and to try and keep businesses alive, and also as income replacement, as sort of for people who are losing incomes, so that you preserve some aggregate demand. I think one of the challenges people are having is understanding what we mean by how we manage shocks. If you recall, after 2007, we had an economic stimulus package, okay? And the government said, we need to spend money. Uhuru Kenyatta was finance minister. We need to spend money to mitigate the global shock as well as our PEV. And I remember him saying, look, if we use the government disbursement system, the government budget, it's going to take a long time. It's inefficient. So we are going to use CDF infrastructure. And they told CDF to come up with any amount, any projects out there that they think should be funded. The other thing, if there's any government department which has a program which can be funded quickly to stimulate the economy, that they should do so. So one of the departments which came through was the fisheries department, which came up with something they'd been wanting to do, a smallholder aquaculture program. And you do exactly what Kwame said. You throw money at it. That's pure Keynesian throwing money at a demand stimulus problem. And it's a correct thing to do. In fact, after the stimulus package, most of the fish production went down. And that's fine, because you wanted to tide people over the crisis. And after that, they went back to their normal economic activities. That's pure Keynesianism. Now, so it is, if you start talking about segregating economy by SME, KQ is grounded. It's not an SME. Yet it's asking government for a bailout. Yeah, KQ could benefit from the Lifeline Fund. Yeah, because what you're reaching is making sure that KQ's planes remain serviceable, because you don't want to degrade those assets, and also that KQ employees continue to provide some demand in the economy, that they continue to go shopping, so that shops stay in business. Okay, so I hope it's a transmission mechanism you're looking for. What is the most efficient transmission mechanism? Now, when you say it's a government public works program, then government is going to put money in the budget. It is going to have to do procurement. It is going to have to get that project started. And the double lag time for that kind of thing may be a year, if not more. Sometimes, I mean, government already has an absorption problem. So if the government is trying to do its mechanism, it's going to have an absorption problem. It's a macroeconomic policy instrument, not something targeting a specific sector. Why would banks hold the money? They already do. These are their customers. One of the things you're actually mitigating is the loan default, because the businesses which then stay afloat, the consumers who actually stay afloat, some of them actually have bank loans, and the banks are restructuring them. And then you start risking having bank failures. So one of the things then that you're trying, that's precisely what the Lifeline Fund is trying to do, is to mitigate some of those effects so that they will be there. But if you don't do anything, they will be compounded. And banks understand that very well. And they manage government and donor credit lines all the time. If you look at my proposal, I had proposed, I said, look, you need to convene Treasury, Central Bank, and Kenya Bankers Association to work up the modalities of doing this. And I am quite certain if that had happened in March, that would have been up and running by April, because they already have a template. Is it sustainable? It shouldn't be. I already gave the example of the fisheries, the aquaculture. Once you use stimulus during the recession, once the recession is over, you withdraw. So the thing you need to do is to monitor. At what point have we decided that this is over? And that's what all other countries are going to do. They decide, okay, it's over now. You then go back to normal business. You have survived the disaster. So it's not a development project, not a development program for the long term. Stimulus are temporary.
Okay. Thank you. Thank you so much.
Okay, fine. Next, we'll ask Mutugi. Mutugi, you have a question. Please ask now.
Thank you, Kwame. I hope everyone can hear me clearly. First of all, Dr. Ndi, thank you very much. It's been very insightful. My question relates to the horrible structure of our debt, of the debt that Kenya has taken, and especially the external debt. So about 2 weeks ago, the news came out that apparently Kenya had turned down the opportunity. I'm not sure whether it was from the Paris Club to restructure debt. There was a window which had been provided, but Kenya said that the level of scrutiny that would come and obligations that would be mounted upon that condition, the conditionalities of all that would be too extreme, and they opted out. So, and I also, from hearing, since I'm not an economist or a finance practitioner, I've gathered from people in the sector that the impact of that, of getting involved in such debt relief or mechanism has a domino effect on other things. Say, like, the credit scoring, the rating agencies will take you down, and that probably has a domino effect on your capability to access international debt markets, such as, for example, the Eurobonds that we seem to have a great affinity towards. So I wanted since you mentioned the debt structuring, I wanted you probably if you could comment on whether you mentioned that you propose that we should take that path, but considering the fears that Treasury has expressed, what do you think about that, especially us turning down that opportunity to restructure our debt?
Yeah, that's a good point. I mean, it's not just Kenya which has done it. One of the and the reasons which they give are valid, because once you go into debt restructuring, that will affect your credit ratings. It may affect your access to the market. The G20 facility, the conditions were actually even more specific, because they talked about signing up to limiting your commercial borrowing, and they actually had fairly strong conditionalities. And quite a few countries, I think Kenya, Bangladesh, Cameroon, quite a few countries which have access to markets. I think that was something they needed quite a bit of consideration. The other challenge with that facility is China, because although China is a member of the G20, it's not a member of the Paris Club. And I think countries which have got things between countries and China are done behind closed doors. So there might be concerns if they are asked to open up their Chinese relations to scrutiny. And it's not, the way that was structured is not for everyone. I know that the AU is still working on something more structured, particularly for the frontier market countries, even in terms of private debt. Yeah, so that was a sort of emergency response under the G20. But quite a number of countries, it had some teething problems. But the last time I looked at it, I understand maybe up to 20 or to 30 of the eligible 70 countries have applied. But really, that is something which favors countries that are much more dependent on aid, on ODA, as opposed to the countries have begun to move more towards market. So it's part of the problem of one size fits all, that group of about 70 odd countries, IDA countries, blend countries, as the World Bank language. It's a very diverse group. There are some for who that makes a lot of sense. They only owe money to donors. There are some who are much more concerned about their market credentials. There are some who have got issues with China, or a combination. So it's not automatic that just because it's been offered, you take it up.
I have two more questions. The first is by Joanne, and she's asking, I mean, you're having mentioned that one of the main constraints that a low-income country such as ours has is that we don't have a formal welfare system in place, or at least a mechanism for providing assistance to people in distress. So she's asking, is there hope that an efficient one could be built for Kenya? And what would be the risk? I mean, or does a risk exist of pilferage of those public funds? So that's from Joanne. So basically talking about a disbursement mechanism. And then we have Anita comes back and says, commenting on the same comment, that look, you say that the major problem is that infrastructural deficit for disbursing funds quickly. And I think she's talking about the welfare side, and she's asking, would the Huduma number have been, a cheeky question, would the Huduma number have been handy? Would it have come handy for this problem? And then we have the obviously a third question from Joka. Joka says,
okay, disbursement mechanism is the same question.
Yes. I mean, would a Huduma number have been suitable as a disbursement mechanism for households?
I think numbers which come to mind, there's two sort of platforms which come to mind. You don't have to reinvent the wheel. One is a social security number. Yeah. So if all you need is just a universal sort of system. And the standard one is that everybody ought to have a social security number. And the other one, which can also be related and connected to that, is universal health. Yeah, there are some countries, I remember many years ago, when going to the UK 30 or more years ago, and the NHS card was supposed the first thing that somebody got. And then that was sort of like actual sufficient identification. If you are a sort of alien in the UK, I think for short term, because you needed to have health insurance or something like that. So you don't need a sort of surveillance platform. If you just had a universal social security number, or a universal healthcare number which has the details of people you can actually, and health system actually collects a lot of information that you can actually use. But the other way of doing it, and I think that is probably, you don't need one thing, and I already proposed that in my open letter, is to use social capital. Because people live in communities, and communities tend to have quite a lot of information, as well as enforcement mechanisms, or what you might call sort of accountability mechanisms. So it's I think for us it's actually quite easy to structure a community-based sort of system, because even those bureaucratic systems have their shortcomings. I think, in fact, there's a way in which a community-based system might actually be superior.
Okay, thanks a lot, David. I think let me just try and sum up two things. One, that citizens are not doing enough. Well, we listen to all those speeches every Friday about. We listen to all those speeches every day about what the infections rates are and whether those numbers are actually credible or not. But we're not getting a view about what government has to actually deal with it. I agree with you. I think the other point that's also quite material is we will dodge. We had a chance early to dodge the pandemic bullet, but have to face the economic one. You are saying that by pussyfooting, it's possible that we'll be faced by a double whammy, one from both of them, an economic bullet on this side and this other. But I think the essential thing too is that if the economy had been in a good place, then maybe we'd have had more options to do that. And one profound point that you also mentioned is that we actually had the chance because there was money in terms of switching expenditures plus the OD facility that government has with the central bank, but for some reason they were preserving their gunpowder, and they haven't used it to put off the fire. So obviously it's as if they're preferred projects, which will not necessarily be able to, which will not necessarily help with the kind of thing that we have here. So I'll close the meeting for that. Thanks a lot. Thank you very much, David. You said at the beginning of the meeting that you have, it's a long time since you spoke at an IE event. That's very, very true. So you've challenged us, and we'll be holding this follow-up meeting. So if you have time, maybe in another month or 6 weeks, we can actually follow up and see what happens. Because I think this pandemic thing is something that needs to be watched on a day-by-day basis. So maybe in another 6 weeks, we'll come back and you can let us know what else has come forth. We hope it'll be far happier times then, even if, based on what you've told me, I'm not sure we seem to be fumbling. The one that also is important is that we must be worried about populist opening. Even I'm not too sure that there's bulletproof evidence to suggest that if we opened up, we'll be able to that it'll be better. The days after opening up will be better than not. So thanks a lot, David, taking your time. And of course, I know you probably have had a dozen webinars this week. Thanks a lot. And to everybody else who's been here,